Welcome back to Market on Close. We have just a few minutes left in the trading day, so that means it's time for the big picture. We'll welcome in our team from Charles Schwab. Joining us today is Michelle Gibley, the Director of International Research for Charles Schwab. Now, Michelle, I think we have to start today with your thoughts and takeaways on this trade deal that we've reached with the EU.
Yeah, I mean, it just adds in with what we heard with Japan last year. Some of the worst case scenarios appear to be off the table. Tariff rates are up sharply this year, and there's still a lot we don't know, but generally the risks have receded, and I think the markets are welcoming that. We still have some outstanding trade partners that we don't have deals with yet, or we don't have new trade deals with, and that would be Canada, Mexico, and Taiwan. And also outstanding are duties on pharmaceuticals and semiconductors, as well as a deal with China. In terms of China, tensions there appear to have eased. And there's still the possibility that we could get a large trade partner like Canada that has difficulty getting a deal and escalation returns. We've seen, President Trump attack Canada in the past, and Canada's been willing to retaliate. So if that happens again, we could see some market volatility around that.
And of those deals that we haven't reached yet, those are some large and influential trade partners. Which one do you think is going to be the most important or impactful?
Well, Canada and China, I think, are certainly the two bigger ones. Canada, because we do have a lot of trade with Canada. And as I mentioned, they have shown a willingness to retaliate so far this year. And then, of course, China, just because China seems to be the center of all of this trade war rhetoric.
And do you think that as we're reaching these deals, some of them at higher rates than any of these countries had hoped for, do you think that there may start to be a natural tendency for some of the countries to change their trade relationships away from the United States? Obviously with partners like Mexico and Canada, that would be difficult. But with some of the other countries, do you think we're going to see a shift that could potentially be detrimental to the U.S.?
Yeah, definitely. Countries outside of the U.S. aren't standing still. They're looking to diversify away from the U.S. There's just a slew of trade deals either announced or underway so far this year between countries outside of the U.S. And I think that's really quite interesting. For a lot of countries, certainly the U.S. is the largest economy in the world, but it's not everything for them. And so they can increase trade with each other to sort of offset any kind of reduced exports that they have to the U.S.
And with this court case involving President Trump, well, there are several, a half a dozen of them, but one of them begins oral arguments about whether or not he can legally use his executive power to slap these tariffs on at any level, at any time, at any country. Does the impact and outcome of that case actually matter in the grand scheme of things, or do you anticipate that going all the way to the Supreme Court?
Yeah, I think it probably will go all the way to the Supreme Court. And so this court case is likely, we're not likely to see an outcome, maybe not until middle of next year. These trade deals that we have so far, they're not really trade deals, they're frameworks for deals. We don't have a lot of details. But countries might be making deals that supersede the use of emergency authorization, so they can make a deal that's outside of the use of IEPA. And then the longer those deals are in place, the more they could settle in as the new normal. But at the same time, since nothing is really signed yet, they could change in the future once they become final. But the Trump administration has other means, other tools that they could use to come back with other tariffs as well.
And I was just speaking to Scott Bauer about the dollar strengthening today on the news of this trade deal reached with the EU. How will that impact some of the international stocks that we've seen performing really well if the dollar does continue to strengthen?
Yeah, international stocks could underperform in the near term if the dollar strengthens. A weaker dollar has added just over 1,000 basis points to international stock returns this year. And after a run of weakness, the dollar could bounce in a mean reversion trade, or maybe as uncertainty eases in the near term, like we're seeing today. And so that could hurt international stocks. But we still believe that international stocks are attractive longer term. Economic data in Europe is coming in better than expected. And there could be a new growth story in terms of an increase in infrastructure and defense spending. And valuations in Europe are still quite attractive as well. So I think it might be a time to look to add positions if you're still underweight.
So you still think that it's a good time to diversify into international equities, even if we are seeing continued stronger dollar?
Yeah, I think that a bounce in the dollar is probably a short-term factor, and I think there could be further pressure on the dollar as we head into the back half of this year.
Well, Michelle, we appreciate you being with us today to help us break down all the tariff news, and I'm sure we'll be talking again shortly as that tariff deadline is coming up on this Friday. That's Michelle Gibley from Charles Schwab.